Hi everyone, welcome back. Today we're unpacking a hot legal question in crypto. What exactly does the SEC legally consider a security? We'll dive into how the Howey test defines it, why the recent SEC loss in the XRP case matters, whether Bitcoin qualifies, and what the future of crypto regulation and its impact on DeFi might look like. Under U.S. law, Securities Act of 1933, the term security includes many instruments like stocks, bonds, notes, and the catch-all investment contract. A key Supreme Court case, SEC v. Howey in 1946, set the standard. It defined an investment contract, aka a security, as having the following four characteristics. 1. An investment of money. 2. In a common enterprise. 3. With a reasonable expectation of profit. And 4. Derived from the efforts of others. If all four prongs are met, the asset is regulated by the SEC, requiring disclosure, registration, and investor protections. Many crypto proponents argue that most digital assets are decentralized, so they don't involve a common enterprise or reliance on promoter efforts. Coinbase famously compared tokens to collectibles like Beanie Babies, not traditional securities. They claim tokens like Bitcoin or Ethereum are used as currencies or commodities, not securities. That debate is central to regulatory confusion in crypto. The SEC sued Ripple in December 2020, alleging XRP was sold as an unregistered security. In July 2023, Judge Analisa Torres ruled that sales to institutional investors did qualify as investment contracts under Howey, but programmatic sales on public exchanges did not. In other words, secondary market trades of XRP are not securities. The SEC has since dropped the lawsuit entirely in early 2025. That makes Ripple a partial win. Initial offerings counted as securities, but everyday trades didn't, suggesting a nuanced, fact-based approach. What about Bitcoin? The SEC has previously stated that Bitcoin does not meet the Howey test. No centralized issuer, no underlying promoter whose efforts drive expected profits. Bitcoin only satisfies the investment of money prong, failing the common enterprise and effort-based profits criteria. So under current legal attitudes, Bitcoin is not a security, more like a commodity regulated by the CFTC, not the SEC. So what does the future of regulations look like in the crypto space? The SEC's aggressive actions, including litigation against exchanges, lending platforms, and stablecoin issuers, signal a push toward regulating cryptos as securities. However, the XRP outcome shows that courts may refuse broad brush classifications and look at specific circumstances. For DeFi, regulators may push for KYC, disclosures, and licensing for lending pools, staking, yield platforms, and the like. Positives include increased investor protections, reduced fraud, bank-like credibility, and potential institutional adoption. Negatives include loss of permissionless innovation, centralization of protocols, higher compliance costs, and barriers to entry for small builders. Final thoughts and takeaway. The SEC sees many tokens as securities under the Howey test, but courts, as with XRP, show flexible, case-by-case application. Bitcoin is not a security because it lacks central enforcement or profit expectation from others. Future crypto regulation may help legitimize certain digital asset sectors, but if too heavy-handed, regulation could stifle DeFi innovation. In a maturing space, the balance between innovation and investor protection will shape whether regulation helps or hurts crypto's long-term growth. My name is Ed Anderson. I am the founder of the Hey Ed YouTube channel and WhatsApp community. Please like, subscribe, and comment, and I will see you in the next video.
Copy that.